Hey guys, I'm back in Florida. As you can see, the trip was great, man. At Canyonlands and Arches, especially Canyonlands, that is a really, really cool place. And let me just tell you, if you're into camping, if you like camping, I'm going to give you two locations because for a lot of these national parks, if you want to camp, you got to go to recreation.gov and make a reservation for these campsites, and it's very hard in all of these national parks to get a reservation, in peak season like this. They're all filled up. But I found two that are on a first come, first served basis. So you might want to write this down or jot it down. One is called Willow Flats Campground. It's a first come, first served basis, and I think there's like 12 campsites, and it's just a beautiful, beautiful secluded location right on this overlook of the Green River. I mean, incredible scenery. And I went there and there was like 2 people there. And that's a first come, first serve. And it's nothing. I think it's like $15. It's self-pay. They got a little kiosk there with an envelope. You just stuff. And if you're a senior like me, it was only $7.50. And the other one is Horse Thief Campground. I didn't stay at that one, but Willow Flats, man, that's really good. And again, you don't need to go to recreation.gov and make a reservation. You can just show up. I mean, there was nobody there. Maybe I got lucky, but I don't know. It was like, that's Juneteenth and everything. So, and the parks were, they were crowded. Not when I went, because I went in the late part of the afternoon, because here's another thing. From 7 a.m. to 4 p.m., you need to get a timed entry ticket now, plus the fee. I have a lifetime annual pass to all the national parks. So I don't have to pay that fee, but I mean, you cannot book a timed entry ticket. They get booked up. But if you go after 4 p.m., or you can go early in the morning and watch the sunrise, but I was going after 4 p.m. It was really nice. Nobody was around. I was by myself, get to see the sunset. It's freaking beautiful. Anyway, let's talk about what's going on. So Trump now, he's pulled back from an imminent bombing run on Iran on that Fordow reactor. Now he's saying we're giving it 2 weeks. This might be a smokescreen. I don't know. Maybe the U.S. Is still moving assets into the region, aircraft carriers or support, military support in case Iran does try to hit back if we do something. But, I don't know. Trump is like that. He's on one day, he's off another day. Israel's not going to stop. The number of missiles coming in has diminished greatly, although they hit one hit a hospital, and that's just, I mean, what can you say? Like, there's absolutely, when Hamas puts their military command inside and underneath hospitals, and they get destroyed as military targets, because they are, there's a global outcry. And then Iran targeting civilians, that's a war crime. Anyway, fiscal flows are very strong. Look, we're just right now, I sent out what I think is a very interesting graphic, which is a visual representation of the tax drain in April. You know the saying, I'm sure you've heard, like, we work 4 months out of the year to pay our taxes. You can see this in the visual graphic that I sent out, where we still have not recovered from the April tax drain, okay? But then we also recently had a June tax drain thrown in there. But, like, you can see it clearly in the visual representation, there's still something like 120 billion left to recover. So like what, April, May, June, July, sometime in July, we will have recovered all that. And so, yeah, we work for 3 to 4 months to pay Uncle Sam, which is completely ridiculous. It's too much, all right? So the slightest slowdown in leading fiscal flows would cause a very, very sharp contraction in the economy. But luckily, we don't have that. It's only a matter of time before the stock market makes new highs based on the fiscal flows. The only thing I would say, which I have been saying, I want everybody to understand this, that if they don't raise the debt ceiling, that would be a very negative development. And I've explained it in the past as to why that would be negative. We would enter into kind of a negative, vicious cycle. Government could only spend the tax revenues they get. They got to spend to provide the tax revenues, to provide the money into the economy to pay taxes. So the economy would slow down, less tax revenue. They would have to cut spending more. The economy slows down more, less tax revenue, and on and on. You have a vicious circle that is created, and that is going to drag everything down, like to the point where automatic stabilizers start to kick in, and it would stabilize that. But we've never been in that situation before. So we don't want to be in that situation. But I'm just letting you know that if they don't raise the debt ceiling, that's not a good development. If they do raise the debt ceiling, we're going to go to new record highs. And even if, yeah, we're going to go to new, let's just put it this way. They have to raise the debt ceiling because we're going to hit the X date. I think Bessent said sometime in August. So right now, my outlook is bullish because I do think they would end up, I said this yesterday, this is what Congress does. It's brinkmanship right to the very end, to the 11th hour, the 12th hour before they do anything. I'm going on that playbook. And if they don't raise it, we have to maybe readjust the strategy or the outlook. But right now, I think that these war jitters and stuff like that, when the market's down, it's creating a buying opportunity really in all risk assets. I mean, you see gold pulling back. And again, I'm not a big gold guy. I mean, only for me when conditions are really, really, when everybody is out of gold and it's kind of like nobody's paying attention, that's when I look at it. But right now, I can say that this pullback is still a buying opportunity, okay, based on the fiscal flows. All risk assets right now, stocks, gold, oil, commodities, basically all risk assets, you got to take these pullbacks as buying opportunities. As for bonds, my view there. I think we're kind of like in a holding pattern right now. I was encouraged to see the bond market sustain its gains after the Fed meeting and the Powell press conference, where again he went hawkish. And I think, as I've been saying in my recent videos, I think this Bessent strategy of creating sort of a shadow Fed when the president nominates a new guy, I think the market is starting to consider this. I mean, the new guy hasn't been named yet. It might actually be Bessent himself. But for sure, whoever Trump is going to nominate, he's going to be a dovish guy, and the market's going to start to focus on that guy's outlook and that guy's comments, and they're certainly going to be dovish because that's what Trump wants. So I think you got to start buying these dips in the bond market now. I think these price rallies are going to hold. It's going to be cautious, but this is a good opportunity to get in. I think it's a low risk environment. Look, we may risk some price upticks. You know, we've seen oil pop up, natural gas pop up. So that might happen. But I think if that does happen, that's an opportunity to get into treasuries. All right. Anyway, I just got back, so I got a lot of work to do. It was a great trip. And again, if you go out there, check out those 2 campgrounds that I talked about. In the meantime, please like and subscribe. It helps the channel very much. And don't forget to go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. Have a great weekend. Bye.